Good morning, everybody. As usual, we will divide the presentation into two parts. In the first part, we will discuss the industry structure, and in the second part, we will go much more into details into the company's financials. So, as you all know, pressure shipping is part of the dry bulk market, and therefore we do not carry any containers, nor do we carry any liquid cargoes. And in the dry bulk sector, we are now predominantly in two sizes, in the small handy size sector of the market as well as in the supramax sector of the market. What I have put up for you here is a very long chart on the Baltic Dry Index, which is a measure of the market. So if you look at this measure, you can see clearly that we are at or near the bottom of the cycle. If you look at the averages, it gives you a very clear idea of the cycle, and you can see clearly that since the big up cycle in 2007 and 8, the market has been consistently falling down, and we are now past the low point of the cycle, and we hope that the next phase will be the up cycle starting in the last quarter of this year. This is a chart that shows you the seasonality, and it tells you the importance of China. Since China became the manufacturing capital of the world, during Chinese New Year holidays, the industrial production in China slows down, and therefore raw materials going in and out into China, as well as semi-finished and finished goods leaving China, slow down during the months of January and February. And then you can see that there is a very clear, sharp bounce back, which normally is the restocking of iron ore in China. Thereafter, the grain shipments start out in South America generally in the month of December, January, February, March, and sort of finish by June, at which point the market has reached a peak. Thereafter, the market falls because of the OECD countries slowing down their industrial production, because they go on their long holidays in the months of July and August, and the market comes down to a seasonal low because there is no grain shipments during the months of July, August, and September. Thereafter, the market goes up in a very sharp way all the way till the end of the year, and this is mainly, again, that the North American grain shipments start out, as well as that the industrial production of both the OECD countries and China is in full swing at this point in time. So this is a seasonal chart, and it's an average since 1985. So some years you will not have the seasonality, in other years it will be very, very clear. Looking at the price of ships, if you look at the last big recession, 1985, 86, 87, you can see that the asset prices, except for the Capesize sector, had reached a bottom in 1986. The Capesize sector had already started to improve by that year. Similarly, if you look at 10, 11, 12, and 13, you can see that in the year 2013, Capesizes have already turned the corner and started to go up in asset prices, whilst all other sectors were still falling. So we can say clearly that if we were to look at 1985, 86, 87 as an example, then it looks that we have reached the bottom of the cycle in asset prices during the year 2013. If you look at operating expenses, during the years 85, 86, 87, operating expenses were continuously falling. It did not matter which sector you were in. But if you look at 10, 11, 12, and 13, all you see are that prices are going up year after year after year. So the trend is clear. In terms of cost, prices are going to keep on increasing. In terms of earnings per day per ship, once again, you can see clearly that 1986 was the bottom of the cycle, and in 1987, rates were higher by almost 50%. So you can see that the freight markets when they recover very quickly. Similarly, if you look at 10, 11, 12 and 13, you can see that the recovery phase has already started in the Capesize sector after reaching a bottom in 2012. But for all, and even for the other sectors, more or less you can see that the recovery has started towards 2013. We are hoping that 2014 will show a stronger picture. Coming to the supply side. Now, if you look at this slide, the upper half of the slide shows you that currently, as of the 1st of July of this year, there are 11,290 ships in the dry bulk sector. The average age is just under 9.5 years, and this is about the youngest that the world fleet has ever been. The total deadweight tons has now reached 757 million tons, and the average size is reaching a Panamax size of 67,000. In the lower half of the slide, especially in the last column, you can see the change in deadweight ton terms that has taken place in the first half of this year. And if you see that, totally 22.21 million deadweight tons has been added on during the first half of this year, or roughly 3%. And if you want to see the breakdown in which sector has been the largest growth, you can see that clearly in the last column. These are the balance ships still on order during 2014, what is still to come in 2015, 16 and 17. And we have further broken this down into the various size sectors. So if you look at just the bar charts, you can clearly see that the maximum building of new ships is taking place only in the Panamax and the Capesize sector. If you look at the order book on an annual basis, like when were these orders placed at the shipyards, you can see that in 2007 we had the largest order book ever being placed in any one year, 169 million deadweight tons. This slowed down to 104 million tons in 2008, picked up to 105 million tons in 2010, and then sort of came down quite sharply till 2013. When the market started to improve, you can see clearly that we had the fourth highest order book in history in 2013. Now, 2014 did not begin too well when compared to the second half of 2013, but if you were comparing with the first half of 2013, it was a reasonably strong first half of the year. As a result of the perceived weakness in the market, not too many orders have been placed in the first half, and so we've annualized that and shown you this number. But if the market does improve in Q4, which we expect it to, then you will find that this number might change quite significantly, just as it did in 2013. Coming to scrapping, you can see that scrapping is starting to slow down, but compared to 1986 is much higher in absolute terms, but in percentage terms is still quite low compared to 1986. So we think that scrapping will continue in a reasonably large manner during the next few years. This slide shows you the difference between the projected deliveries that are supposed to take place during any one year, the actual deliveries that have taken place, and what do we estimate for the year 2014. Now, the difference between the projections and the actual deliveries is what is known as slippage. And if you look at slippage, you can see more or less it's averaging around 30-35% per annum. So if we were to apply a slippage factor of 35% and a scrapping rate of 20 million tons per year, then you will see that the growth rate for 2014 will drop to below 5%, and for 2015 definitely below 5%. And this would take us almost to an all-time low as far as the last 14-15 years are concerned. The only one year where it was below 5%